Hello and welcome back to PJ Trade Reviews. It feels like it's been, a while since we got into an actual trade review. And today we caught an absolute filthy A+ inverted fair value gap model on a Monday. I really didn't expect to even trade much today because of what's going on in Iran, with Israel, with the United States. I was really kind of hesitant to want to engage in the market on my funded accounts. But man, when this setup presented itself, it was an absolute freebie. And I'm going to break it down for you guys here today. So glad to have you guys back on the channel. If you guys are just tuning in here, my name is PJ Trades. I've been doing this for coming up on 10 years in January. I love to give you guys free education. And that's what we do here on the channel. We break down trade reviews that I take in my premium Discord. I go and give it to you guys pretty much free on YouTube. So all I ask is that you would like, comment, and subscribe to the channel so I can continue to bring you guys free education. So let's just get on right into it. The market at the open trends downward. And I really expected this, honestly. I was all over this market. I've been saying that I think the market's still bullish. Be careful about being caught in a bearish trap. And right at the open, the market just completely sells off. Completely sells off. Now, in this sell-off, I guarantee you so many people got caught in it. Because think about the headlines, right? Think about the news. Iran, Israel, United States, World War III, fear, all these words, these trigger words are being used. And people at the open are shorting this market. And in my experience, coming up on 10 years, I'll say 9.5 years of trading, whenever retail is telegraphing what they want to do, the market does the opposite. Right? I'm always looking to fade the news, and I'm looking to fade retail. Yes, I am retail myself, but I'm smart money retail, not the dumb money retail. Right? So this market sells off aggressively to the downside, and it starts trapping in the bears. Think about it like this. People see this. I'm shorting. I'm shorting. I'm shorting. All these orders are coming into the market. The market comes down into this external low and sweeps it. Well, let's hop on the 15-minute as well. On the 15-minute, we have a 15-minute fair value gap in this region. Okay, key 15-minute area. And if this market is going to flip this bearish, then maybe we'll start looking for shorts. But look what happens. It comes down here, sweeps liquidity, taps midnight opening price. Okay. And if we look at the 1 hour, we have a 1 hour fair value gap in here as well. So now we have two areas of confluence, right? We have a 1 hour fair value gap and a 15-minute fair value gap. In order for us to want to flip bearish, we really need to close below these gaps aggressively with body candle closures below. We just don't get that. We do not get that. Now, if we hop back onto the 1 minute, you can clearly see what happens here. This market sweeps liquidity and V-shape recovers right out of that area, right out of the 15-minute and 1 hour fair value gaps, right? So this now is a beautiful V-shape recovery out of a higher time frame PD array. My bread and butter. I love taking trades out of a 15-minute plus fair value gap. So we have a 15-minute old fair value gap and a 1 hour fair value gap coinciding with each other. Very strong area for support and a possible reversal area. So now we get a V-shaped recovery, right? And if we bring price back just a little bit here, because this price moves very aggressively, okay, we could see that the market leaves behind relative equal highs. And at the same time, we are looking for another draw on liquidity higher. The market leaves behind a London high right here. Now, the purple rectangle inside of London is an old BPR that I have marked out here. It's a bearish BPR, okay? It's a 1 hour bearish BPR. For people that don't know what BPR is, it's two fair value gaps overlapping each other, okay? So you can see here that there's two 1 hour fair value gaps overlapping each other, which creates a BPR gap, which is a balanced price range. Now, BPRs are very strong for support and resistance levels. And as you can see in the first touch of the BPR, we fail. Okay, we fail. We come back down into this 1 hour gap. We come back into the 15-minute gap, and we start to recover again towards the BPR. So now I'm seeing this recovery. I'm seeing all the stuff that I'm explaining to you guys, the 1 hour gap, the 15-minute gap, and I'm searching for an inverted fair value gap idea. Where can I find an inverted fair value gap idea? Okay, well, there's one here. There's a 2-minute gap left behind. Okay, cool. Now let's go on the 3-minute. There's a 3-minute gap here now. Now, for me, I'm looking for higher time frame gaps, right? In this example, there is one on the 2-minute, but I'd rather trade the 3-minute bearish fair value gap, or the, excuse me, bearish fair value gap, sell side imbalance, buy side inefficiency. I'd rather be trading this 3-minute flip. So now it's just a waiting game, guys. This is where the patience comes in. This is where our model, you know, we got to wait for our model. We're not taking trades every single second of the market movement. We know the model. We now have structure, and we built in our bias towards why we want to see a flip higher. Dude, now all you got to do is sit on your hands. Just wait for the 3-minute flip, okay? Here it comes. Boom. 3-minute flip. Very strong reversal. Mark the 3-minute as an inversion. Bring price back one more time. Right here. On this flip, on this inversion right here, we are in this trade right here, okay? Stops are going to be below the 3-minute inversion. Now, I'm running a wider stop on this trade. I'm running a wider stop. I'm running a 47-point stop on the NASDAQ. Now, if that's too wide of a stop for you, just size down your positioning. You guys don't need to be trading full mini contracts. Trade micros. Hop in with 2-3 micros. Some of you guys have an issue holding trades, and the issue is you're oversized. You are getting nervous and emotional in your trade because you're oversizing your position. Try sizing down for once and see how that affects your mental and your emotional and your nervousness while you're in a trade. So yeah, I'm running a 47-point stop, but I'm running a 1-2 RR trade. This is my 1-2 right here at the London high, right above the London high gets me 1-2, right? This is a perfect 1-2 RR trade. That's what I'm hunting and searching for in every single trade setup, at least at minimum, a 1-2 RR trade. So the risk versus reward makes complete sense here. And the reason that I like this trade setup even more is because we have relative equal highs here, which means once I get these relative equal highs, I could just go break even. This trade becomes risk-free. So you got to build in a lot of different steps into when we're getting involved in a trade. It's not just hit a button and hope. There's a lot going on here, right? So I have a lot of guidance in the trade. If I get TP1, I'm going full break even at TP1. So there's a lot to like about this trade idea from a risk reward perspective, and also from a management perspective. I know that as soon as I get here, I can run stops to break even. This trade becomes 100% risk free. Okay. So that's the trade idea of the day. And the execution is flawless. It's just a 3-minute flip. Very simple. Your grandma could learn it. We wait, we enter, and we execute. That's it. Very, very simple. The issue is most of you guys don't have the patience to wait for this right here. You have no patience for that. You are already trying to jump into this market. And honestly, some of you I'm speaking to in this video, you probably got caught in the trap. You have to have a set of rules, and you got to have max discipline in this business, guys. This is all it takes. It's not brain surgery. We're not solving, complicated math equations here. It's pattern recognition. And once you're able to identify your pattern and execute without hesitation, you will make money in this market. But until then, if you don't practice discipline, if you don't practice risk management, if you don't practice all the stuff I spew on this channel, you will be setting yourself farther and farther back from being profitable. That is today's trade setup, guys. And that's it. It's an 88-point winner towards London high, and we're done for the session. So that's all it takes is a one and done day like that, a clean 3-minute inverted fair value gap setup, and we're done and dusted for this day on a Monday. I hope you guys enjoyed today's trade review. I really enjoyed doing this for you guys. So show me some love in the comment section if you guys are still enjoying these trade reviews, and I'll see you guys in the next video.